Okay, so hello everyone. If you can actually hear me clearly, do well by commenting on the comment section. Okay, so very good. So quickly we're going to run through today's analysis. Welcome to Syntactic Goddess. I will today be at least running us into some certain pairs or instrument. But before I proceed, do all by sharing, commenting, and likewise share to your friends and likewise your family. Likewise, in between, if you specifically need me to analyze a certain instrument, do all by including it on the comment section. Okay, so a brief one. I am the strategist. The strategist FX. Likewise, which can be visibly seen on Instagram. But okay, okay, good. So as I said, if you want me to analyze a certain instrument, do all by making sure you do that on the comment section before I proceed. First thing, this is V25. As you can see, the market is specifically bullish. Now, if there's anything I will be specifically doing is towards making sure you get everything clearly and visibly. Okay. As I said, if you want me to analyze a certain instrument, do all by commenting on the comment section. Okay, I'm seeing V75S. Now, we will run through into V75S quickly. Okay, I'm seeing 10S likewise. So it's a beautiful morning. So like quick one. We are diving into V75S. Then we will quickly after V75S. Then we will jump into 10S briefly. We're still waiting for this to load up. Okay, so we have arrived. So quick one on V75S. I might be too fast, but if I'm actually too fast, do well by still commenting on this comment section. Now the market extremely on VIX on 5S has been extremely very bearish. Now why do I say so? The area of validation, take note, the area of validation happens to be to the downside. As I said, my name is the strategist FX. So the market gave us a break of structure, as I said, a validation to the downside on the 24 hours. If there's one thing I would love to do specifically is joining you, to taking you through every single areas of the market without you missing any of it. So the market gave us a quick break of structure, which is an area of validation, letting us know that we're extremely bearish. Now, if there's one thing likewise I would also want to check thoroughly, did the market specifically run into the area of premium or discount? Now, as you can also likewise see, based on validation, the market did not thoroughly dive into the internal structure at this level, right? Leaving this high, which is yet to be taken on the long run, right? Which is this on the 24 hours. On the 24 hours, a break of a structure which signifies validation for the market being bearish. Now we will mark down again. This is a thorough break of a structure to the downside. Likewise, that still indicated that the market is still extremely bearish. It's still extremely bearish. Now, if there's one thing about trading is that you want to mark out the areas that are very visible, right? You don't want a situation where you mark out certain areas the market will or might not get to. Okay, remember I said the market gave us a break of structure on the 24 hours, right? Letting us know that we are still very much bearish. We want to follow that trend. Now, I would want to, in this case scenario, ask myself a question. What did the market leave above the marketplace? These are quite very important. Now, the market gave us still a break of a structure with body, right? Still signifying or letting us know that we are still rallying to the downside. All of these specifically are all range structure though. So the market gave us a break of a structure through this, right? You can see what did the markets do? We took this certain level of secondary inducement and rallied to the downside, gave us a break of a structure to validate. Take note, gave us a break of a structure to validate that the market is still very much very much bearish. Okay, so we continue. So the market gave us a quick break of structure at the level of the level of range structure continuation, gave us a break of structure, right? We have this break that are called the body, then we have this area that is unmitigated. Now take note of that. We have this area that is unmitigated. The market gave us a break of structure, uses level of secondary, but did not give us enough distance in the market. You see, there's one thing about the market we should specifically note or denote. Now, first thing is that there are certain times where the market gives us a break of structure of this pattern, right? Gives us enough distance. Take note, enough distance. At times the market won't have that enough energy and hold at the area of either breaker and continue to the downside. But we are not specifically here to us making sure that we're not here to do a whole lot of teachings. Remember, I said we have a break of a structure which validates that this area of liquidity on secondary has been taken, right? And we have this area that is unmitigated. So we want to thoroughly check if this area specifically is valid for a sell case scenario, or we've gotten a break of a structure to rally into this internal structure. Now, left for me on the 24 hours for on V75S, the market returns back into this area of POI. We might eventually be raiding this because this specifically is seen as as liquidity, right? Which is this this SMS, which happens to be shift in market structure. Take note, shift in market structure. the market gives us a break of a structure to validate this shift. Okay, now as I said, we want to thoroughly check around this perspective if we are extremely valid for a sell case scenario. In trades like this, I label it as my B setups. Now, if there's one thing as a trader you want to learn is how to denote or mark out your areas of A and B plus setups. Okay, not all foods are specifically foods for you to bite or to chew. Now we will dive into 4-hour time frame. Remember, I said we want to denote or ask ourselves if there are valid reasons enough for us to continue a sell case scenario, right, on V75S. Okay. Now remember, I see secondary area level has been taken, right? We have this certain continuation. The market failed due to the enough distance that occurred in the marketplace. Be feel to run through back into this area, just like one of the structures I drew, right, in terms of pattern, where the market gave us enough distance, right, gives us a high, comes back, read it, but fails to run into the level of what internal structure. Now we will remember a break of a structure code. Let's not forget that, because that's the area of our trend validation. Now we move over to the next one, which happens to be 1-hour time frame. As I said, if I'm extremely fast, do all by commenting on the comment section. Okay, now I want to specifically denote the areas that give us our areas of pure. You can see we have this double top that was swept off completely, so I'll call this stop hunt. So the market swept this stop hunt liquidity, gave us enough move to the downside, though we had to struggle. So we call these areas levels of weaknesses or level of weakness. Before the market could rally or do a quick rally, we did a quick hunt. As you can see from this perspective, we did a quick hunt from that, right? And the validation that this hunt was taking was when the market gave us a quick break to let us know that what that hunt has occurred, or the market has taken this hunt of liquidity. This POI has been mitigated specifically. You see, one of the problems about most of us, we traders, is because one of the problems is marking out areas that are already mitigated. You need to be able to decipher certain areas that are mitigated already. Now, as you can see, this POI has been mitigated successfully, right? Which is this. So I have no business around here. I have no business around this perspective. If the market is reading this high specifically, then no, we are rallying above the marketplace. To read this is also weakness. So if the market runs through back into any level, then I don't expect this area to hold, because that's our areas of weakness specifically. Okay, good. So we move forward. Now we're seeing that that's an area of weakness. The market, we want to mark out the areas we will use as point of interest. So we'll dive into our 30-minute time frame. Okay. Now the 30-minute time frame, from this angle, there are certain trades I don't want to take. As a trader, there are certain things I try to avoid, which is pullback, or which are pullbacks. Right now, except the market has given me a two-way validation. A two-way validation, that is, the market gives us the first break, gives us the second break, with validating certain areas of major. Now, as I said, the market gave us a break of a structure based on pullback on the 30-minute time frame. From the 30-minute time frame, you can see the market is extremely bullish, right? From the 30-minute time frame. You see, another thing we teach, or another thing we look at on the Synthetic Goddess Lab, is what we call time frame validation or time frame alignment. So when we have time frame alignment, we seek for time frame validations. So now we have this break of a structure, likewise, that continued its trend. So in this move, we want to ask ourselves, was this area mitigated? You can see this area wasn't mitigated thoroughly. The market gave us a break of a structure, gave us a base, gave us a quick rally, right, to the upside, came back at base and continued. There was not enough strength to return back into this area for more continuations. So left for me, for trade setups like this, I try to avoid them. Why? Because they are not my A or B setups. They are pullbacks. Now we want to concentrate more on where the market should mitigate from, as I said. Now, specifically, we all know that the market has mitigated from this perspective. As I said, we already took a hunt of liquidity at this perspective. We had this break of the structure to thoroughly take note, to thoroughly validate that this high has taken what? A hunt. That is, we have hunt of liquidity. That's the validation for what? For the hunt. Okay. Now we have this swept in completely. We have a break of the structure which happened internally. Take note, internally, inside this perspective. Now we will still have to dive to the lower time frame to denote or to know if the market thoroughly will use a certain perspective for sell continuation. Remember, we don't just mark certain areas. We want to know why that POI should hold or should not hold. Okay, so as I see it, is one thing here on Synthetic Goddess Lab is making sure that we bring clarity or enough clarity to you, just making sure that you take the right decisions and not the wrong ones. And take note, likewise, as a trader, you want to learn or know how to mark your areas of what we call A and B setups. Now, left for me, if I'm looking out forwardly for areas for sell case scenario, I'm not expecting to use this one because it doesn't hold any certain criteria or characteristics. For those who are mentees or under the Synthetic Goddess Lab, you will know why we are stating that this can't hold forward for a sell case scenario. That is this POI around here. Having the fact that we understand that this area is mitigated, right, as earlier stated. So this can't hold because it's going to be specifically seen as liquidity. Now, if there's any area specifically I would want to hold, if I should use the word hold to ransom, hold to ransom, I want to specifically visibly use certain areas as this. For those who are mentees, as I said, who will specifically understand why this POI is specifically marked. Now, anything above this, remember, you want to make sure or understand if these areas have been mitigated. Now, there are certain kind of patterns we use. We have what we call the range, initiation, mitigation, and continuation. So we quickly had a range, right? We have this initiation, then we have this mitigation that occurred, and we continued. Now we have this break, we have this range, but the market likewise did not give us a thorough mitigation from POI. So now, as I said, I want to see the market give us a certain reaction from this POI. Anything above this is a break thoroughly. Above this, and above this. Please take note of that. Now, I wouldn't be going into full details as we have other instruments we are looking for. Please, if you specifically are with me, I want you to quickly dive on the comment section and respond. You are with us. So as I said quickly, anything above this is a sweep, above this is a sweep, above this, and we have this break above this area of secondary, right? We will have all this rated, and you can see this is weakness. So that is that for me on V75S, having a target, and all we can actually use on this area is specifically what we call a confirmation entry. So once the market gets here, all you want to use is a confirmation entry to continue that trend. Okay, so we dive to the next instrument. Someone included V10S, so let's go into that quickly. Okay, so right here on V10S, remember the first thing we want to do is making sure that we understand what the 24 hours is doing or the daily time frame is specifically doing. As we all know, derived trading view specifically is not giving us everything likewise here, okay. It's not giving us the whole full data at the left hand side, because as a trader you want to specifically understand what really occurred at the left hand side, right? Because it's important. That will help you know if the market will still run into premium, run into into premium. Now we will continue. Now, as you can see specifically on V10S is not quite ready for that sell case scenario. It's not ready because we need extreme validation. The market is supposed to, after this mitigation, the market is supposed to break below this to give us an extra confirmation to continue that move or sell move to the downside. Okay, so now a quick one. Remember, we want to follow the trend because it's important. Now, I don't specifically know what actually happened at the left hand side, but I know for sure that there's enough data at the left hand side. So the market gave us a break of a structure to the downside. Please follow me. A break of a structure occurred. Now, you see, according to what we've been taught based on structure, you know that the market will give us what series of what lower lows, lower highs, lower lows, right? At certain times, the market will have to come back to grab certain levels of inducement and give us a break of a structure. Will give us what? Give us a break of a structure and make that certain continuation to the downside. Now, remember, the first thing you want to understand is that why is the market giving us a break of a structure? So break of a structures do occur for validation reasons. Now the market gave us a lower low, as I said, stay with me. The market gave us this, right? Gave us a lower high. Then we broke through the previous low, letting us know that we've gotten a break of a structure, right? Broke through to validate that we want to continue that sell move. Take note. We have this low, we have this high, then we have a breakthrough, which is the validation. Now, you see, there were certain areas, one of the areas where we would have actually marked. I know majority of us would have used this area specifically as areas of inducement, and having this area of POI mitigated. Now, you see, there are certain structures likewise we also visibly see. We see certain structures as this, where the market gives us a low, gives us a high, then we come back to hunt this, right? Certain times, over times, when the market does something as this and continue. Now, we visibly seeing that same structure at this left hand side. Remember, I don't specifically know what actually happened at the left hand side on 10S because the whole data at the left hand side has been wiped off completely by Derive. So it is a structure I want to see is this. Now, this is this high, right? This is this high, this is this low. So this is our structure high, this is our structure low. So the market giving us this is the high, the lower high that formed inside the structure. So this is visibly seen as our inducement, not this, okay? So by right, if assuming the market gave us something as this, take note. If the market had given us a structure as this, where the market gives us a break of a structure, gives us a high that formed after, take note. The market gives us a high that forms after, then comes back to ready. That's a different case scenario. But in this case, a high was formed inside the internal structure and should be seen as liquidity. So the market now comes back aggressively after this validation, right? Comes back to grab this certain liquidity, right? This inducement. Now, you see, it is one thing for the market to specifically sweep inducement, and it's another thing for the market to validate the inducement. It is now, you don't want to just see the market sweep inducement. You want to see the market sweep inducement and give you a break of the structure. I want to believe that I'm actually leaking out some small secrets. Now, as I said, you don't just want to see the levels of inducement taken. You want to see the validations that comes after. So if the market sweeps inducement, the next question I want to ask you is, where are the areas that the market has taken to validate that those lows or inducement has been taken. So this has been taken. We've not gotten a proper validation yet that the market wants to continue after sweeping this inducement. Remember, I said this is a structural low, structural high, structural low. Likewise, that validates that we are still extremely bearish. Take note, the market can still sweep this now, but left for us, we know that this area is an area of major. Take note, it's a strong high. You have this area being swept off completely. We have this area being what? Being swept off completely. Now you notice that that we have a break of the structure, a tiny break of the structure that occurred at the left hand side. We have this high that formed after the break of the structure. So the market, as you can see, the market comes back, raids the inducement, comes back, gives us a low that fails to break structure. Now note this, remember I said there was no validation yet that this inducement has been taken. Now the market just sweeps it. The validation would have come if the market had taken this low, but we failed to read it. So the market had to come back to give us what we call a hunt of liquidity. Right? Give us a hunt of liquidity. Now we have a break of the structure that occurred, right? A break of the structure that occurred. Now this break of structure that occurred at this low was to validate that inducement, primary inducement, the inducement has been taken, hunt of liquidity has been taken. Right, that's the validation. And the next thing the market had to validate us was that the market broke structure to the downside and still had to let us know that we are extremely bearish, that we have met offsetting criteria, and we can now say that this is a strong high. It is a strong high because inducement has been taken, it is a strong high because hunt of liquidity has been taken, and validation has been given, right, to notify us that that is a strong high. Now good, so we have this inducement, so we want the same thing, right, the same thing around this perspective. And let's check the left hand side of the market. So having understood what the market has done at the left hand side, as I said, we've had this inducement. Sorry, I'm going to change this to dotted lines. This helps me indicate that this is an area of inducement or liquidity that's been marked by me. Okay, that has been what has been marked. Now good, so we have these levels of inducement, and the market specifically has swept the area of inducement. So this 24 hours, we dive over to what? To 8 hours time frame. So we want to concentrate now. Take note. We want to concentrate now on what the market is doing at the right hand side. We've now known that the market has taken inducement, so we want to rally with the market. Now take note, as I said, the market can still extremely come back for this high or that area, because it could be that the market has certain data at the left hand side we are not visibly seeing. So what we want to do is that we want to play around with the structure we are seeing visibly. Okay, so now we have this, take note, we have a lower time frame break of structure that we are not seeing yet, which I will denote soon. That break of structure will occur around this area. That's where the break of structure will occur at that area. So I'm going to change this to normal line. This helps me indicate that this is my break of the structure. Now, where is the validation that validates that this high here has taken a primary inducement that is visible on the lower time frame? Now we want to mark, take note, we have this area here, right? A low, we have this high. Now we continue, we have a break of a structure that occurred here. This break of a structure helps us validate that this high now has given us a break of a structure that validates that this high has taken inducement. Now we will still have to rally, as I said. Our pattern and ways of marking or doing analysis is that we will have to take our time to making sure that everything has been gotten. Now a break of a structure. Now I want to believe that you also likewise remember this pattern where I say the market will have to do something like this, then come back and give us a quick move, right? But patterns like this, I have to wait for the market to validate that this has been taken before I can take trades around this right hand side. So that's the same thing that's about to occur. We have this. If you check the lower time frame likewise, you will know that this area specifically, right, this area is the same structure I've given us. We have a break of a structure, we have this that formed internally, and you can see how the market has raided it. Right now, can we visibly check? We've not really had a proper POI that the market has mitigated from. So now we have this, very important. Now we dive into the 4-hour time frame. We've now denoted that primary inducement is located on the 8 hours, but we want to visibly see it right on the lower time frame. Remember the structure as I said, which is this. See how visible it is. The market has raided it. Okay, the market has raided it. Now we have this candle, which is specifically seen as our sponsored candle. You can see the thorough mitigation as I earlier stated. The thorough mitigation after this break of the structure. You can see the break. Remember, I marked that candle. You see, another thing we want to learn is how to have the capacity to know areas of true lows and highs, even through candles on the higher time frame. So the market sweeps this inducement, right, specifically, and gives us a break through this body to notify that this area of inducement has been raided completely. Right now we have this validation. Let's continue. We'll use the same process, right, so as marking this analysis. Now we have this a hunt of liquidity, also called here. Right now we have a proper break of the structure. We have this low. So I want to use it because of the major I'm seeing on the lower time frame. We are not on the lower time frame yet, but I'm already seeing certain things around this perspective. Now we dive over to the 1-hour time frame. We are getting there actually. Okay, so now a brief one. You can see this earlier stated that there is something visible here, right, on this low. That's why I had to use that area as my specific low or break of a structure that will go to the downside. Now there is something likewise I'm also seeing that the market has raided. Now this candle I have marked on the lower time frame, such as 15 or 5 minutes, there is a lower high visible on this time, on that time frame. If we go down to 15 minutes time frame, so the market, and which we will label that as an inducement. Okay, so the market gives us that and gives us a thorough break of a structure. Now through this, right, I could call this my minor break of a structure, which is MBOS, minor break of a structure. Now we dive over again because we want to be sure of the point of interest. Now what can we also visibly see around this low that could make or trigger the market to come back? You can see this liquidity resting below the marketplace. Very visible, very unique. Now we dive to the 30 minutes time frame. Now still on the, now take note, remember I said on the 1 hour that we had a high, right, that is visible. So if we want to quote certain things, we will realize that we didn't need to go to the lower time frame for us to know that this specifically is a high. So you see that this inducement was taken. We had a break of the structure to validate or truly validate that the inducement has been taken on this time frame. So now 15 minutes time frame. Now what we want to do is that we want to mark the areas of POI or point of interest that can be visibly used for us to continue this trend. Now left for me, this area has been mitigated, this area has been mitigated visibly. Now there is a simple trading mechanics. Now what I mean by simple trading mechanics is structures. You see, I know most of us likewise, if the market reads this, we will specifically label this area as break of structure. That's quite wrong. Now a break of a structure, you need to be able, or you need to have the capacity to understand structures and liquidity. You see, having this, likewise, we have this through low, we have this high, we have a breakthrough. This high has created this low, and this low now has failed to break structure. This has failed to break structure. So this is weakness, as you can see from this high. So all we want to see is that once the market gets about 90% of the range, which is 90%, we will seek for this purge. Will give us a little bit of purging, right? Then give us that quick move to the downside. Okay, as I said, that quick purge above this high, then we quickly sweep this high, then continue that sell move. So we dive over to the last time frame, which is specifically 5. I would have loved to journey us into the 1 minute time frame, but there will be no enough time for that. Now, what can I visibly see on this time frame? I could allow me to journey through 3 minutes. So now, okay, so now a quick one. We know that the market specifically has this area of inducement that needs to be rated. Please, let's take note of that. That area that needs to be rated. Now, as I said, we have this area of liquidity. Take note. You can see visibly we have this that needs to be rated. Take note. That area that needs to be rated. Now, according to retail, we all know that this is what we call drop base drop. Okay, our drop base drop according to retail. So we still have to dive to our 1 minute time frame. Sorry, I have to journey us into all this time frame, but it's for our own good likewise. Okay, so good. Now we are now here on the lower time frame. Okay, so visibly we have this low, we have this high, we have a break of a structure that occurred. Now, so it is an area I would specifically want to see for a sell case scenario is this, which is around this POI. Take note, around this POI. But I'm going to be extending it for a better purpose. So as I said, we have this is a sign of weakness. We have our drop base drop on the lower time frame. Then I will be denoting this area. I will be extending my stop loss into this, which shouldn't be much. So we go back to the 15-minute time frame. So I want to believe that you've seen how well we've been able to dive into these POIs. So as I said, I want to see this area being paused once we get into at least 80 to 90%. So keep this at this. So then a quick move back into this low. Now 30 minutes time frame. Okay, so I want to believe that I have journeyed us into every bit of every analysis, right? Starting from the VIX of the 5S and running into the 10S time frame. I mean into the 10S or into 10S likewise. And I want to believe I've been able to give us every hint on why the market should use certain perspective, right? So as I said, once the market rallies to about 80 to 90%, I want to see the market give us a purge above this high, right? Then that is signs of weakness and give us a quick rally. So do well by making sure that you share the channel to your friends and family. Wish you good luck and good trading.